Okay, we are live on Facebook and YouTube and TikTok. So, hello everyone,
That's awesome.
and this is the Billionaire Wealth Crew. And say hi, Sarita.
Hey y'all, how y'all doing today? I'm so excited to be on. so
Exactly,
let's
it
get
is a
let's get
wonderful day.
I
Go
want to
ahead.
get started a little bit because I think that this is important to know. So the holidays are coming up. We are so excited about buying stuff for our kids, setting our family up. But have you ever thought about setting your family up in a way that's going to set them up forever? I know me with my kids, I like to go out and buy them all the stuff, etc. But let's just be honest. After 2, 3, 4 days after they've had their little toy, that all that joy and everything has built up, it's just like they can't find pieces, it's broken, etc. And I mean, it's a joy to see them. But what if you were able to build up something for your children and you that would last a lifetime? So today we're talking about riders, the different kind of riders on a life insurance policy. And it's so important to think about a rider as this. This is so easy. You're driving your car, mom, dad, uncle, aunt, grandma. You're driving your car, and then you have your child in the back seat. That's the same way to think about your life insurance policy. It is you're driving the car, you're the policy owner, and then you have a rider, which is your child in the back seat and onto your rider. And we're not only just talking about adding your child as a rider, we're going to talk about different things. So I want you to think about that. Somebody else gave me this example. They said a rider is, for example, if you're the horse and then you have somebody on top of the horse, like, so the horse would be the person that has the policy, and then the rider would be the person on top. I mean, it's like, where did they
All
come
right,
up with
that's a good
rider? But
example.
yeah. So I want you guys to think about it in that way. And then the second thing is, while you're thinking about these things and thinking about setting up for the holidays and thinking about your financial future, I want you to think about things like, okay, I already have a policy, but when was the last time you looked at your policy, and what was the last time you seen like what your policy actually has? Because as life evolves and as we get older, we need different things in our policy. So that's what we're going to be talking about today. Some of the riders that can be added to your policy. You may have to start off again, but we just want to let you know, make sure that your policy isn't outdated, and we want to make sure if you don't have one, these are some of your options. So that's all I got for right now.
All right. Okay, so I'm going to just give you some examples of some riders. So let me present here. And one second, let's see.
While you're doing that, I like to keep myself mute just in case somebody come in with a question.
Okay, no problem. All right, so I'm all the way. Let's go back. As Sarita just explained, is in addition to your insurance policy. So, riders in an insurance policy are additional insurance. The policies can be that can be added to your policies. You can add the rider to your insurance policy to cover something you believe is necessary but isn't sufficiently covered by the regular insurance policy. So riders are, let's see, added extras. You can buy separately to your standard life insurance policy. Adding riders will raise the cost of your insurance. So riders are extra. Many riders are only triggered in special circumstances. So you're going to see that once I start explaining some more of the riders. Some riders have rules about them under what conditions, if you will. They can be that can be added to your life insurance policy. So some life insurance companies have conditions to where you can add certain riders. All right, why should you consider a life insurance rider? You can get riders to extend coverage and add more flexibility to your policy terms and conditions. For example, so the renewable term rider gives you an option to renew your term life insurance policy without any underwriting. So it'll just automatically go into the next term. Is it possible to add a rider to an existing life insurance policy? Well, the best time to add your rider is when you get the insurance policy. If you want to add it, you will have to submit an application. Most riders can be added later on, but some cannot. So it just depends on what kind of rider you have. The insurer will ask you to take a medical exam to verify your health. So it'll be just like you're getting a new policy all over again. And this information will help them to decide if they can offer you the benefit you applied for. All right, is it possible to drop a life insurance rider from an existing policy? So dropping a rider from an existing life insurance policy is much easier than adding one. So once you have a rider, if you get a rider when you first get your life insurance policy, you can drop it later if you like. All you have to do is inform your insurer if you wish and fill out an application form and submit it. So that's all you have to do to drop your rider. So once the rider has been dropped, the insurance company will adjust your monthly premium also. So you won't be paying that extra money.
I got something.
So let's
to
talk
add
about the
here,
first
too.
one. This is a term rider. So we all. Oh, go ahead.
Sorry about that. I wish I had a little hand raised. I do want to add this. I thought about this too. When you have your child on as a rider, they can be on as early as 15 days old. When they turn 25, depending on the carrier, 24, 25, they will automatically get dropped. I don't want to say dropped like that, but dropped off of your policy as well. So they have, for some carriers, 24, 25.
All right. And so let's see, this adds extra term life coverage to your base policy. So say you have a whole life policy, you can get a term rider to give you the amount of coverage you need for your life insurance policy. At the end of your policy's term, you may convert that term into permanent life insurance, such as whole life insurance for seniors. So if you start off with the term, you can convert it into whole life policy. The premium rate may increase, but you will continue to have coverage that lasts as long as you live, allowing you to leave a legacy to your heirs. So you just have to think of the price difference when you're changing your insurance. So you're adding things to your insurance. So the next one is accidental death and dismemberment rider. This rider provides an additional payment if you die or lose a limb or a function such as hearing in an accident. So it has to be an accident. This can't be something genetic that just happens to you over time. Generally, your beneficiaries receive the additional payout if you die in an accident. You, on the other hand, will receive the benefits if you are injured. So just know, if you're injured, you're going to receive these benefits, but if you pass, your beneficiary receives the benefits. So the insurer pays the benefit only if you sustain an injury or die under predetermined parameters. So you have to know what those parameters are. You may want to ask before you get this rider, what kind of accident can I be in to be able to add this rider so that it benefits me? All right, the benefit amount you usually get depends on your injury. And for instance, some policies with an accidental death and dismemberment rider may pay 50% of the death benefit amount if you lose one function or limb in an accident, and the full death benefit amount if you lose two or more functions or limbs. All right, and the next is a waiver of premium rider. This one is like one of the best riders because we never know what's going to happen. Payments are waived if you are disabled or unable to work. So this means that if you have this rider, the insurance company will pay your insurance, your bill, if you can't. excuse me, if you meet the qualifications for disability as determined by your insurance company, your policy will remain in force even if you can't afford to pay the premiums. Excuse me. So this is a great rider, and a lot of people get this on their insurance also. So this one is a great one. Also, it's a return of premium rider. So say you have a term policy, you pay your term policy for 30 years, nothing ever happens, you don't die. You get to have that back. You get to have those premiums back. But there may be an administrative fee deducted, so you don't so you won't get back 100%. Excuse me. But you get back most of the money that you put in. So these are just additional riders you can get. There's so many riders. So we can't talk about all the riders today, but these are just some of the other riders. So estate protection rider, critical illness rider, and one for your child, also a child term policy as a rider to your regular insurance policy. So if you want to add a rider to your insurance policy, give us a call. Excuse me. So me, Cyrita, or I, Tanisha.
I'm
do you
like
have anything
looking
to
at
add,
my,
Cyrita?
yeah, I was looking at my notes to see. This was good. This was like good information. I feel like every time we go over this stuff, I learn stuff myself. So I'm about to look here. I was trying to share this live. Okay, let me see here. Something that I wanted to like cover. Um, so one of the things that like with us, because we are independent agents, we work with more than just one company. So the good thing is that we don't have we are not limited to what we can help you with. So all of these things are really based off of what you have going on in your life. So this is a good way to kind of when we talk to you, we go over like what is what's going on with you, what are you looking for, more importantly, because I've heard so many people say, well, this is what we can give you, but really we have so many carriers that we work with that we can really cater the products to you. So I wanted to say that because some people, they have a very small limit and they push the product on you that they want to give to you, and we work the opposite. Let me see here. So we talked about that critical
Right.
injury. So
Like you said, there's so many carriers. We don't have to try to, don't think, this company is not about just getting the money. We actually care about what you need.
I had
And
somebody.
since
I
we
had
do have
somebody.
so many carriers, yeah. Go ahead.
Oh, sorry. I had somebody say that they had diabetes or they had high blood pressure and they couldn't qualify for life insurance. So I was like, well, who was it through? But it was through just like a company, let's say just like Mutual of Omaha. That was it. And I was like, oh no, that's just that company. I was like, just because you have those conditions,
Right.
and you got denied by one company doesn't mean that you're denied in general. Like, so I think that's a big misconception for people. Like, oh, I have this condition, I'm not going to be able to get covered, and I'm not even going to try. So that's kind of hard
Right.
because
Yeah.
one,
Yeah. They think they have to give up after that,
yeah, and I've
but
had a
that's
lot
not
of
the
people like,
case.
yeah, I had a lot of people like give up and actually tell me that, like, oh, I'm not even going to try. The next thing is I just wanted to add these. The disability thing is so huge. Um, these facts here is like a stroke happens every 40 seconds. It says 6 to 10 Americans live with at least one chronic disease. And then, that could include diabetes, high blood pressure. 6.5 million Americans are living with Alzheimer's. So if we add some of those riders before you get ill, before you get sick, those things can help you because
Mhm.
we live in America where, we're getting our, a lot of people are surviving a lot of these things, but they can't go back to work. They're not passing
Right.
away. So Just one last example, when I worked for the Social Security Administration, we had a lot of people coming into the office applying for disability. So they would come in thinking that they were going to get disability right then and there on the spot. Next month, I'm going to get it. No, they wouldn't get it for 3, 6, 9 months. So this is a way to have a buffer behind you. So if something were to happen to you, you don't have to go into an office, worry about you're going to get approved. You can already have this because we can get, a lot of times with the benefits, it's liquid, 24 to 48 hours, you're getting your money. So, based off of whatever rider you have.
Right.
So, consider that too. And then if you want to go and apply for disability or whatever, you have that to do. You don't have to worry about, oh man, am I going to get covered? You know that you have this. And if it's something that fits in within your policy, you're going to get that money 24 to 48 hours. So that's all I had to say. That was my notes I had written down.
All right. Well, thank you so much, Sarita. But yes, the riders are a good benefit for your insurance. And when we put together a package for you, we may have, 3 different things that work for you. We may have a whole life policy, a term, and a rider. So it just depends on what you need. So like I said, we're not just out for money. We're out here to help people. That's what the company is called, People Helping People. So we're here to get you the policy you need. And thank you for watching today. And thank you, Sarita, for being on with me.
Thank you, Tanisha.
And we will see you next week.
Next Wednesday, we'll see y'all.
You're welcome. We'll see you next week at the same time.
All right.
Exactly 7 p.m. Central Time and 8 p.m. Eastern Time. All right. Have a good night.
Bye.
Bye.